The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to this special webinar for HDFC Securities customer base that have organized today. So I thank you all of you who have logged into this webinar. So I have a very special speaker today. He's from HDFC Life, and his name is Mr. Pankaj Sharma. So Pankaj Sharma is from the training team of HDFC Life, and he's someone who does this very passionately in his work. On an average, every month he covers about 50 to 80 trainings across countries, across different segments, and covering an audience of anywhere between from 50 to 300. So welcome Pankaj ji on this webinar. And as you all would have known, we at HDFC Securities keep engaging with our clients through for multiple products, and the objective is to share some information, share some good knowledge so that it helps you in your decision making. Our previous two webinars were on the lines of term plan, and the topic was whether life insurance is a need or an option. The second webinar we had was on the investment plan that are linked to life insurance plan and how it can help you in your goal planning, achieving your long-term goals. Today's topic, as it was mentioned on the subject line, is also on the similar lines, but it will cater and address your long-term savings, which can be achieved through life insurance plan. And one of the popular product, which is known to all of you, is pension. So be it a private professional or a PSU employee, in today's time, it is very important that we plan for our long-term savings through pension plans, through annuity. So to take it forward, I'll invite Mr. Pankaj. So Pankaj ji, over to you.
Thank you, sir. I'll just start my screen sharing. Thanks a lot for inviting me. In fact, while I heard you, I heard that we have been talking about various segments in life. If you look into the spelling of life, it is L, I, F, and E. So there is a big if in our lives, and this big if is all about the first L preceding it and the E after it. This first L is living long, and the E is early death that you have already talked about. So today I'm going to talk about a topic which is living long, and in life this IF stands for insufficient fund. So today we are going to talk about a subject which is living long with insufficient fund, and that is what brings me to our topic today, which is perspective on retirement segment. So I'll just be jumping on to few of the important things. Why does one need a retirement planning? There are many reasons to why do we need a retirement planning. However, the four most, I would say, the obvious reasons are this one. In earlier era, the era previous to us, in 90s, people were living in joint families, wherein the elderly were taken care of. हमारे फैमिली में जो भी सीनियर सिटीजन्स थे, we used to live in a joint family, we used to live together, and even if the people in societies were very much glued to each other. So in this kind of a situation, the elderlies were taken care of. But nowadays, 50% of the households in India are living a nuclear life, which means they have a 1 to 4 member. This also indicates that they will not be having adequate financial support by the time they will be a senior citizen. Second reason is our lack of social security. If we look into some of the countries like Norway, Sweden, Denmark, here 100% of the eligible population is covered under universal healthcare system, pension, unemployment benefits, etc. However, if you talk about India, only 2 out of every 10 people is covered under a social protection benefit, which includes our PF, gratuity, etc. So 53% of Indian salaried class do not have access to this social security benefit. This is also an alarming situation. Number three, increasing cost of living. If we consider that our current inflation rates are growing at a pace of around 6%, हर साल जो हमारी महंगाई है ये अगर हर साल 6% के हिसाब से बढ़ रही है, so in next 20 years time, whatever we are spending today will be costing 3 times more than today. This is just one example, that if we consider expense of 10,000 rupees in 0 years, in next 10 years, this 10,000 will be costing around 17,900. By 2044, that same amount will be costing, that same amount of goods and services will be costing around 32,071 rupees. And in next 30 years, its cost would be something around 57,485. Next 40 years, it will be 1,08,000, 1,02,857. So these are some indicative figures. If you want to testify these figures, you can look down to figures which were 10 years ago, or figures which were 20 years ago, or figures which were 30 years ago, for a similar kind of commodity, for a similar kind of services that we are availing today. इससे आपको ये बहुत क्लियरली समझ में आ जाएगा कि आज से 10 साल पहले, या आज से 20 साल पहले, या आज से 30 साल पहले क्या कॉस्ट थी विज़ आज क्या है, एंड अकॉर्डिंगली आने वाले टाइम में क्या कॉस्टिंग है. And the fourth reason is this life which we are talking about, lengthy life. This lengthy life comes with many things which will be needed to make it comfortable. Our life is going to be lengthy because medical facilities around us are, number one, easily available and are developing with the growing times. So if we look into some of the commonly, I would say, common critical conditions like cancer surgery, angioplasty, bypass surgery, heart valve replacement, kidney replacement. So a cost of them is also mentioned vis-a-vis the surgery. It's, if I say angioplastic, which is a very common surgery nowadays related to heart, its cost was around 2.5 lakh rupees in 2020. However, by 2030, it will generally be costing around 6.5 lakhs. Similarly, by 2040, this would be costing around 16.8 lakhs, and so on, 43 lakhs approx by 2050. In fact, if we look at the report, which is besides this chart, this is a report by Motilal Oswal. This indicates that India is one of the highest country where the medical inflation is at the highest rate. So not only the medical facilities are easily available around us, but because of progress in medical science, definitely we all are going to live a longer life than what we are expecting. A life of next 80 years will not be a very big challenge. In fact, if you ever study through the WHO reports on life expectancy, the life expectancy in India is expected to be around 80 years by 2030. I'm into this domain, life insurance domain, for past 2 decades. I have seen the products which we used to sell at the inception of 2003-4, at the inception of this life insurance industry. In those products, many life insurance products were not allowing coverage beyond 60 years of age. Those days, life insurance policies or the pension plans were designed in a way that by age 60, this will come to a maturity. However, today, that same industry is offering products which starts from age 60 or 65 and offers a life cover till age of 80, 85, and in a few cases, whole life coverage of up to 100 years. So this itself indicates that in the coming times, we are going to have a long, lengthy life, and to make this lengthy life healthy, we'll have to spend some money. Now, how will a retirement corpus help me in this space? In this space, if you go by something called retirement planning, which will be involving a process of accumulation of fund as well as consumption of the vested fund and providing for healthcare. So by involving these three elements, one can plan for their golden era which they are going to face very soon. I hope that I am audible to everyone and you all can see my slides.
Yeah, Pankaj, go ahead.
Yes, sir. So sir, Neeraj sir, अभी अपने तरफ से ना, मतलब this is what I just wanted to point out. Why do we need a life insurance policy and what to do for a life insurance policy? Now, with your permission, I will simply move on to one of the highest selling product with us that is going to cater to this particular need of our customers. So if anyone wants to add something or has a question, you can wait for a while. Otherwise, I can move on to the one of the most
We can finish the presentation part and then we will have Q&A session.
Sure, sure, sir. So with SDFC Life, we have a plan called SDFC Life Sanchay Plan. This is one of the highest selling product with us, and the reason for highest selling product with us is that this is a non-linked, non-participating savings plan, which means that this is a plan which comes with all kind of guarantees as well as flexibilities. Now, if you want to utilize this particular plan as a pension plan, then this plan has got a variant called long life income, a long-term income. This plan has got four different variants. However, this particular variant called long-term variant is a variant which can be utilized as a very good accumulation plan and can be utilized as a very good pension plan, a plan that comes with all guarantees and there are no ifs and buts into it. In other words, this is a plan जिसे आज हम लोग 2024 में स्टार्ट करेंगे. एक कस्टमर अपने कन्वीनियंस के हिसाब से इसमें सारी चीजों को चूज कर सकते हैं, and for next 25-30 years this plan is going to give a guarantee. I'll just give you a brief about this plan. What do we have to offer in this plan? This plan is available in various kind of variants, and the variants are majorly a premium paying term. That means for how long can a person accumulate into this plan. कस्टमर अपने कन्वीनियंट के हिसाब से 5, 6, 7, 8 से लेकर के 12 सालों तक का प्रीमियम पेइंग टर्म ऑप्ट कर सकते हैं. वट एवर दे वांट दे कैन, in fact whatever they need according to that need and whatever they can afford basis their affordability subjected to minimum premium criteria, one can start this plan very easily. So very first thing is your accumulation phase. That is what we call how much time will you be paying. The second part of this plan is called a deferment period. Now this policy offers a deferment of minimum 0 years to a maximum up to 15 years, which means, let's say I want to accumulate for 10 years and I want to defer my benefits for another 5 years. This third last 10 years accumulation and 10 to 15 years of policy term. Now what will happen here? Let's say a person started in 2024, अभी से वो start कर रहे हैं, 2033 तक he or she will be paying and accumulating for their golden era. They can choose a deferment of 0 to 5 years, which means after paying for 10 years, they can either start from very next year, that is 2025, or they can defer it for a maximum of another 5 years, that is 2030. And once this deferment period is concluded, a person would be receiving income for next 25 or 30 years, whatever they wish. In case somebody has expectation of living a age of another 25 years, they can plan accordingly. In case somebody wants to plan for a longer duration so that they can leave a legacy also, they can plan for 30 years. So 25 साल या 30 साल के duration के लिए anyone can go for it. Okay. There are a few boundary conditions also and few conditions to be kept in mind. This is just there in the slide. This is available to people between age group 3 to 60 years. So आपके आसपास में कहीं भी आप किसी भी एज ग्रुप में अगर इसको लेना चाहते हैं, up till 60 years, which include means 60 years plus people can also go for it. They should not be 61 years of age at the time of issuance of this policy. So even if somebody has just retired and wants to accumulate through this particular plan over a period of next 5-10 years, they can do that, and after that they can get a income for another 25 or 30 odd years. The another point to be kept in mind is the maturity age range. This should be between 18 to 65 years. Now, good thing, the amount received at the end of this policy year is absolutely tax-free, and this will be for a fixed duration of 25 or 30 years. Minimum premium is something which will vary from person to person. However, for this particular product, the minimum premium criteria is something around 30,000 rupees yearly. Now let's get into it, that how does this plan work. We have an example here for a customer who is around 42 years of age. This is Mr. Fahim, and he is a businessman hailing from Lucknow. So Mr. Fahim is accumulating into this plan for another 12 years, which means from age 42 till age 54, Mr. Fahim has accumulated into this plan. He has made an annual investment of around 2 lakh rupees into this plan, and he has sum assured of 22.6 lakh into this plan. After this 12 years, there will be a deferment period of just 1 year that is opted by Mr. Fahim. And now this policy is going to pay for next 30 years. So what will Mr. Fahim receive for next 30 years? Mr. Fahim will here receive a guaranteed amount of 2,54,500. And by the way, this 2,54,500 is a sacrosanct amount. This amount is not going to change under any circumstances. Mr. Fahim, if he lives for another 30 years, he is going to receive it. And at the time of maturity, when this policy is 43 years completed and Fahim's age is 42 plus 13 will be 55 years and another 30. So 85 years. For Fahim's age, 85 years, this policy will be covering him. And at the age of 85th year, Mr. Fahim is going to receive something around 26,54,500 as maturity benefit. All these amounts that is visible on the screen right now, these are absolutely guaranteed for a person who is 42 years of age. For different age groups, this guarantee will vary. For sure, if somebody who is starting at a younger age will definitely be having a better guarantees, and somebody starting at a later age will not be having a guarantee as great as this. Not only this, we are also covering the second E, that is early death situation, into this policy. How does it work? In case Mr. Fahim dies any time during the accumulation phase or during the deferment period, well, in that kind of a situation, 10 times of the annual premium subjected to a minimum of 1.5% of 105% of total premiums paid will be given to the nominee. So here in this particular example, he is going to pay 24 lakh rupees over a period of 12 years. So his sum assured in case of demise is 27 lakh 95,000 rupees. Okay. So from first year till 12th year, 35 lakh rupees would be the sum assured. This will be paid to Mr. Fahim's nominee in case of any kind of unfortunate event, that is disease. Moreover, if Mr. Fahim passes away during this period of next 30 years, once his income has started, once he has started receiving his guaranteed income, now there can be two situations. Somebody from Mr. Fahim's family, that can be a nominee, that can be a legal heir, can receive the remaining payouts for remaining duration. Let's say we had assured this 2,54,500 for next 29 years. Mr. Fahim passed away at the 19th policy year. For remaining 10 years, somebody from the family will receive the same 2,54,500 and the last maturity amount, last payout amount, which was supposed to be paid in the 30th year. Okay, so this will be available to a nominee, and if a nominee is not willing to go for this installment, then they can go for a one lump sum payout, and that lump sum payout will be depending on the I would say discounted value at the time of taking up this lump sum. So this is all what we are going to offer to our customers in case of uh, in case of long-term retirement planning for our customers. So this is all. I'm open to your questions. If you have any questions, Anina sir, if you have any questions pertaining to this.
Yeah, so thank you, Pankaj, for a very simple and easy to understand presentation that gives a lot of insights about long-term savings which can be done through life insurance plan. But so Sanchay Plus is a very popular plan in the life insurance industry, and most of our customers are having this plan. That I would like your support in answering the question which I'm getting on my chat board. So the first question is if you can throw some light on the annuity option. How does it work in case of pension plan or a retirement plan that one may?
Okay, So, sir, if you talk about annuity options,
And my apologies, all the people who have logged in due to some technical issues. Mr. Pankaj is not visible to us, and
my
my sincere
webcam is
apologies
not
for
working.
him.
Well, sir, so if we talk about annuities, we have got various kind of annuity options. Well, this particular plan, Sanchay, if we talk about this, exactly is not a annuity plan. This is a life insurance policy which gives a guaranteed amount for next 25, 30 odd years. These guaranteed amounts are also going to be exempted from tax provided two conditions. Number one, 5 lakh rupees or less premium, and the second condition is a life coverage of 10 times. So that is the reason we are promoting this Sanchay Plus as a pension plan. If a customer is more interested into a annuity kind of a product, then we have got various kind of annuities. Those annuity options are your life annuity with return of purchase price. Then we have got joint life last survivor life annuity, joint life last survivor annuity with return of purchase price. So these are a few of the annuity options that is available with our properly annuity plans. I'll just give a brief of that. Also, allow me to share this screen. Just a moment, sir. I hope my screen is once again visible.
Yeah, it is
Uh,
visible.
in pension segment, we have got various kinds of product. This is a very lengthy PPT, so so this is it. In annuity segment, we have got various plans. We do have plans which help in accumulation, which we do have plans which ensure annuities. These are some of the plans available on the screen right now.
So Pankaj, as people are aware that it is a little complicated product when it comes to retirement product, at least for a layman. And the objective of our webinar is to demystify all the
Sure,
technical
sure, sir.
jargons and the complexities which are involved in any financial product. So just to take it forward, suppose if somebody buys in retirement plan, and there is I think a clause which says that at the age of 60 you need to buy a separate annuity plan and you can withdraw 60% of that. I think that is in NPS, right?
Uh, Not exactly in NPS, but most of the insurance plan. In fact, sir, while you were talking, I just opened up the slide. This retirement plan will involve three different stages. First stage will be your accumulation. Now, what happens here? You will be contributing towards a corpus. Okay. So once your corpus is created, then you have got certain options available with you. Now, what are those options? First is you can utilize the entire corpus to go for an annuity plan from the available service providers. मतलब आपने जितना भी कॉर्पस अपने लिए जमा किया है अपने उस डिजायर्ड ड्यूरेशन में उस कॉर्पस से आप अपने लिए पेंशन ले सकते हैं. Second option available to all the emittents would be they can commute up to 60%. This up to 60% is exempted from tax under section 1010A3. Now what happens here is your fund is now available to you, and almost 60% and exactly 60% of the fund is also exempted from tax. Remaining 40% will certainly go for a I would say annuity, and whenever you are receiving those annuities, it will be considered as a taxable income to you and will be taxed as per the prevailing tax laws. For example, we are in 2024 right now. Let's say a customer accumulated for 10 years, 2024 to 2033. He accumulated, he deferred it for another 10 years. So let's say 2053, he deferred his plan benefits. Now, at 2054, his plan has come to a situation which we call as vesting in case of a annuity plan. Now, what will happen at the time of vesting? This entire vesting benefit, which means your corpus, whatever we have paid, whatever a customer has accumulated, and whatever interest or whatever growth it has procured over a period of last 10, 20 years. This will be considered as a vesting benefit to our annuitant. Here, the annuitant has these three choices: either go for 100% amount can be utilized towards purchasing an annuity, or maybe 60% can be commuted, and remaining 40% can be utilized for going for the. By the way,
So,
in case annuitant corpus is not sufficient enough to pay 1,000 rupees per month, in that case also this amount can be utilized, can be withdrawn by the annuitant. Yes, sir.
so will it be fair to say that these plans are, in addition to NPS, an alternative avenue to park for the
Yes,
retirement
yes,
planning?
certainly, sir. Certainly.
Okay. Now, the most common question which we get on this kind of forum is that what is the right age to start investing? So I'll break this question into two parts. One is what is the right age, and secondly, what is happening in real life? What is the actual age where you would be seeing customer coming in the product like this with HDFC Life?
I thought that we might come across this situation, and here is the slide which depicts what is the right age. In fact, there I would say whenever you realize this need for insurance and start accumulating for it is the right age. However, at an early stage when we start, this is more beneficial for us. This is just an example. Let's say at age 30, a person starts investing 5,000 rupees monthly and he increases his contribution by 10% every year. Now, this person who is age 30 will be in a situation to save for another 30 odd years. Here we are expecting a growth rate of around 10%. He has made a total investment of 98,69,641 rupees. However, his entire corpus is now 3.2 crore rupees. On the other hand, a delay of just 10 years, a delay of just 10 years, same amount, same incremental contribution every year. Now the person is able to save for 20 years only, and with a similar kind of expected returns, his corpus would now be just 80 lakh rupees. So sooner you start, earlier you start, it is merrier for any person.
Yeah, I think that is the most important slide, I think, which I would request all my customers to go through it. Maybe you can take a picture of it and refer it in your free time to understand it better. And that was the last question on this today's webinar. So thank you, Mr. Pankaj, once again for joining us. And as you all know, HDFC Life is a credible brand, and their products has been they're doing quite well for fairly large time. They have a good track record. So my only request is to give HDFC Life product, be it ULIP or the par products or the non-par products, a good chance understand them through our financial advisors at HDFC Securities, and have a good, safe retirement planning for yourself. With that, I conclude today's webinar, and I thank you once again for joining this webinar with us. Thank you. Bye-bye.